Hey, it's Rav. Welcome to the Everyday Investor, the hottest real estate investment show in the world. That's right, I said it. I don't care who knows it. Remember, when anyone offers you any kind of investment opportunity, you always want to ask those 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return on investment along with the money that I put in? 3, what is the minimum cash amount needed? And number 4, what is the risk? Today's topic, we're going to be talking about making money investing in buy and hold strategies. Kelly's going to come on the show. We're going to look at some numbers. But before we do that, we're going to talk to a good friend, accountant from MNP. Don't go anywhere. We'll be right back.
The Everyday Investor has been brought to you by ProFunds Mortgages, Fixed Returns, Real Security. The Real Estate Center Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
For over 10 years, Strong-Base Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
At Here to Clean, we understand that inviting someone into your home is a big deal. All of our cleaners are carefully vetted to ensure we send the right person to care for your home. We offer a variety of cleaning services to meet our various clients' needs, from small office and vacation rental cleaning, post-renovation and move-in cleaning. We will arrange a team of professionals with the right skill sets to tackle your toughest jobs and get them done right. Email, call, or text us to discuss your unique needs.
Hey there, this is Anthony Maniaci. Here at Maniaci Sobel Altbaum, we're a law firm working for you in all facets of the law. My specialty is working in corporate commercial law and real estate, but we have lawyers that work in all other areas, including litigation and family. Our practice focuses on service with a personal touch, delivering in-depth legal advice and guidance to our clients, treating you as people, not as a number. You can reach us at maniacilaw.com.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
The Real Estate Center is one of North America's leading real estate firms, helping everyday people buy, sell, and invest in real estate. By leading with education, we make sure our clients have the know-how and confidence to make informed decisions, allowing them to reach their goals. Through our vast network of experienced advisors, the Real Estate Center is able to provide a full-service experience across the entire country. Whether you're looking for your first home, an income property, or commercial investment, we're here to help. Visit our website at therealestatecenter.com.
Hey, it's Rav. Welcome back to the Everyday Investor. Today we're going to be looking at making money in a buy and hold strategy. But before we do that, we're going to talk to my good friend, dear friend, Jeffrey Sum. He's from MNP, the largest Canadian accounting firm in the country. Jeffrey, thank you so much for being on the show. I'm grateful to have you. You're not only my personal accountant over the years, I don't know how many years now, 5, 6, 7 years. It's been some time, and I'm grateful that you take care of Sinead and I's kind of portfolio. all that kind of good stuff. Listen, we live in a wonderful country, and it's a wonderful country because we pay taxes.
Correct.
Right, Jeffrey? I mean, do you find a lot of people, kind of walk around and get really frustrated that they have to pay taxes?
Yes, I hear that a lot. I mean, paying taxes is not a bad thing. Paying taxes just means you're making money.
That's right.
Which is definitely not a bad thing.
Well, you're the one that changed my mind on that,
Yeah.
right? You said, Rav, listen, a cow gets fed, but a pig gets slaughtered,
Yeah.
right? And so it's okay to be a cow once in a while, but don't be greedy. Don't be a greedy pig.
Exactly.
Pay your taxes. It means you're making money,
Yeah.
and we get to live in one of the best countries, definitely one of the greatest cities in the GTA. In the entire world.
Correct.
In doing that. So I wanted you to come on the show because I wanted you to I mean, you're a fellow investor, you have a few properties. I love having people on my team that also invest in real estate because things are always changing.
Correct.
Talk about that, about how, in a month the government can come along and change this, and then all of a sudden, somebody who has an incorporation would probably be more favorable if they did things personally and vice versa. Talk about the changes and how often that happens and how we should really dot our I's and cross our T's when it comes to the CRA.
No, good question, Rav. No, I mean, there has been a lot of recent changes in the income tax rules, and it all started back in July 2018. A lot of those changes impacted a lot of small businesses and a lot of corporations. More so, they impacted more professionals than anybody else. So if you have a real estate company,
Yeah.
it's not that much impacted. Everything stays status quo.
Yeah.
It's more impacting the professionals, what the government deems to be high-income earners.
So what professionals? Give me a few professions.
Yeah, professionals much like accountants, lawyers, doctors, dentists, architects. So those that earn professional income and not
Yeah.
necessarily rental income.
Got it.
Yeah,
Got it.
yeah.
So it affected them, and so they're taxed higher. There's some things that they can't do anymore. They
Correct.
can't, they called it income sprinkling or
Correct.
something like that. What does that mean?
Yeah, so income sprinkling is basically taking a pool of money that you have in the corporation and then trying to spread that out over family members. So that's the great thing for bringing that up. So that was one of the major changes that impacted all small businesses.
Yeah.
And so in the past, you could actually income split with a spouse who would be a shareholder of your company. So even if it's a real estate company and your spouse was a shareholder, you can actually dividend split with that individual.
Yeah.
They've taken all that away because of the fact that they felt that it was too egregious for people to split income when someone is not actually working in the business.
Now, if somebody's actually part of the incorporation and has a role in the business, then we can give them a dividend. Or in my case, I don't mind you sharing, even to the viewers. In my case with Sinead and I, Sinead does help me in my real estate portfolio. She or a production company, Lake House Media,
Correct.
Probably more specific. And so we put her on salary
Correct.
because she's helping me, and we have to obviously justify the numbers.
Correct. And one of the rule changes that, to qualify for dividend payments to a spouse, she or he must be working at least 20 hours per week. So that's one of those numeric criteria. But after that, then you can sort of split income any way you want. I like the way I like salaries because of the fact that it's defined. You know it's going to be paid on a weekly basis or bi-weekly, depending on what you want to, how you want to pay it out. And then taxes are paid up front to the government, so you don't have to worry about anything at the end of the year.
And the reason why you say you like it,
Yeah.
you like it because CRA likes it.
Yeah.
And so why, light up their switchboard if we don't have to? I mean, I think that's the biggest thing I've learned from you over the years is that, yeah, Rav, we can do this, but if you want them knocking on the door and questioning, I mean, everything we do is above reproach, and
Correct.
we dot our I's and cross our T's. We break no rules, maybe a little bend here and there, or that's not even the correct terminology, but there's ways that the government allows us to do things.
Correct. Yep.
But why do them all? Why be a pig about it?
Yep.
If it's going to raise a lot of questions.
Correct. Yeah, and CRA just looks at, when they look at your personal tax returns or even your corporate tax returns, a lot of it is just looking at comparators, just to make sure that there's no huge fluctuations from year to year, because fluctuations cause huge variances and raises a lot of questions.
What is your opinion on, MNP is a very large firm. I got a nice Hello Rev letter several months ago, I think last year, and they said, hey, how are you doing? Can we ask you about this and this and that?
Yeah.
And you were able to give it to your, tax
team.
lawyers.
Yep, yep.
They looked at it, they wrote a letter, we showed everything. They wrote back and said, okay, thanks, this is suffice.
Yeah.
And so I'm very grateful that we have that on your team.
Yes.
But what about if somebody, is working with cousin Vinny, the accountant, and they trust him, and he's competent?
Yeah.
What are your kind of objective thoughts to the big firm as opposed to a small outfit? Does it? I guess I think the answer would be it depends on the individual and what he's doing. But I'd like for you to.
Yeah, I mean, great question again. I mean, I think when you're with a big firm, there's reputation. And so they sort of feed off that reputation to make sure that, because everything's followed now electronically, CRA has a track record of who's doing what. And therefore, if they find that a firm's doing things the right way and whatnot, then there's probably less scrutiny.
Okay.
Whereas if you have an individual that's just starting out, even if it's cousin Vinny and he's been around for many, many years, if there's a track history with CRA saying this guy has reported this and it's always been incorrect every year, then I think there's a risk there.
Okay. But then, and again, correct me if I'm wrong, because, there's going to be a few, you get what you pay for.
Yeah.
So there's a few more dollars spent for Rav to be able to enjoy the tax lawyer at M&P or any of the other, people. I mean, you have many advisors around you and so on and so forth. If I am, buying one investment property, one condo downtown, I'm a teacher, my wife's a teacher, would you still suggest, and that's all I'm going to do, would you still suggest that a larger firm could be a benefit? Or in that case, as long as there's trust and competence, we may want to keep with a smaller?
Yeah, no, I'm stepping myself on the toe, but you're right. I mean, you don't need a big firm if you're going to be a teacher or a mom and pop just buying one real estate property.
Yeah.
Things don't get that complicated when you only have one rental property. When you have multiple and you're selling and flipping, there's a lot of rules in place that you have to make sure you're aware of.
Yeah. Okay. And so with that person that's buying that property, would they, and let's say they're going to just do that.
Yeah.
Are they going to put it in their personal name? Are they going to incorporate? And whatever the answer is, why would you say that?
The answer is always it depends on the personal situation. So if you're an employee of a company and you're just doing this on the side, I wouldn't recommend putting it into a corporation.
Okay.
The administration cost is way too high just to have one company holding one rental property.
Because when you incorporate, that's like a person.
Exactly.
So Rav pays his taxes, but then the incorporation, and so you're paying some fees yearly, and it might be just really simple stuff. Is that what you're saying?
Yeah, exactly. And then if it is your first property, more likely than not, you're going to have some losses in the beginning. You want to use those losses against your personal tax.
Yeah.
Because then you actually get a bigger refund.
Okay.
Once you start generating money, then we might consider rolling it into a corporation. If you're buying multiple properties, definitely a corporation makes sense because then you're housing everything in one company.
We're going to cut the break here in about 30 seconds, but when you buy this investment property, regardless if it's personal investment property or in my incorporation, when we sell that, we're going to pay what percentage generally?
If you're buying and flipping, then it could be considered business income.
Okay.
If you're buying, renting, and then you sell in the future, it's considered capital gains.
Capital gains. And capital gains is probably about 25%?
It's about 25%, give or take.
25% if we sell that investment property.
Correct.
Jeffrey, thank you for being on the show. We'll have Kelly on. Please stay on with her and we'll break down her deal. The Everyday Investor continues in a moment. Thanks for watching.
The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Center Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
ProFunds Mortgages and its affiliate Valor Capital offers expert service and funding solutions for builders and developers, offering first and second mortgages with a combination of institutional and private lending. ProFunds Mortgages and Valor Capital offer a full-service construction and development package with in-house engineers, developers, builders, planners, and the best of financial analysts. With the many years of experience and credibility, ProFunds and Valor would love to be your added value financial partner. Visit us at profunds.ca.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
For over 10 years, Strong-Based Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
Like people, businesses have their journey, their path, sometimes straight, but more often evolving, growing, and adapting. And like people, businesses' needs change, creating the need for knowledge in areas like accounting, consulting, and tax. Areas critical to your continued growth and success, all part of the journey, and all part of what we do together with you. So that when your business has arrived, it's ready to keep going. MNP. Wherever business takes you.
Hey, it's Vitali, Rav's door and window guy. Here are 4 quick tips when choosing doors and windows for your home. 1. Get 2 to 3 estimates from a reputable vendor. 2. Choose the right manufacturer. 3. Make sure you have a warranty. And 4. Get professional installation. To book a free estimate, contact us at torontodoorsandwindows.ca.
Hey, it's Rav. Welcome back to The Everyday Investor. We're going to be talking about how we can make money in a buy and hold strategy. My good friend Kelly is with us, of course, along with Jeffrey, who we've already heard from. Kelly, thank you so much for being on the show.
It's my pleasure.
I love having you on. We've had you on once before, twice.
Once before.
But we've seen each other many times, different investing events. And I think the reason, there's many reasons why I love having you on the show, but I just really love your story. I love your why. So before we kind of get into a recent investment of yours, as recent as how many months ago was it?
8 months ago.
8 months ago? Okay, great.
Yeah.
We'll break down some numbers, we'll go through the ROI, all that kind of good stuff. But more importantly, why did you get into real estate investing?
Well, I had thought about it for a long time. And what got me started thinking about it was when my ex and I split up. So when I divorced, our son was young. And after a couple of years of struggling a little bit financially, I took a tenant in to rent out the basement. And so that was kind of my first exposure to the idea of rental income coming from a property. And so just did it to really help get ahead. And then I had started my own business, and that's kind of up and down and financially. So I just needed something to fill in the gaps.
Yeah. And so now a few months ago, this isn't your first investment.
No, this was my third.
This is your third investment.
Mm-hmm.
Okay,
Yeah.
Great. And your son is how old now?
He is coming up on 19.
19,
Almost.
nice.
Almost. 18 still.
And does he have an investment bug?
He does, actually. My not this one that we're doing today, but my second last investment that I bought, he's going in on it 10% with me. So he's finally caught the bug.
So you're teaching him how to invest. No,
I am.
I love that. I'm 47 here very soon. When I was 16, raised by a single mom in Kingston, Ontario, me and mom did a small little townhouse there.
Awesome.
And rented it out and so on and so forth. And so no greater hero on earth for me than my mom, because everything she's done. So I commend you. I'm sure your son is maybe doesn't tell you as much as he should, but very proud and inspired by what you're doing.
I'll tell him you said so.
Yes, tell him he better behave. So let's look at this deal, and Jeffrey, weigh in if you see any, kind of from a tax perspective.
Sure.
But we bought a property here a few months ago, and this is in the GTA, outside of the GTA.
No, it's about an hour and a half west of the GTA.
An hour and a half west,
hour
okay.
And a half, yeah.
And what did we buy? A condo, a single, a duplex? What was it?
It's a duplex, a side-by-side duplex.
Side by side?
Yep, but
Okay.
it was owner-occupied before I bought it.
Okay.
Yeah.
And so when we have is it always is that the terminology that we use, duplex for side by side? What happens if it was an up and down? Do we call it a duplex here, or
I still call it duplex. I don't know if you've heard other terms as well.
Yeah.
I know in different provinces, a duplex is one half of the semi, how we refer to it in the GTA.
Yeah.
So there's different terms, but I have an up and down duplex as well.
Yeah.
But this one.
But the point is, we're getting 2 rents for 1 furnace.
Exactly.
Yes. Okay, so let's look at the numbers here. Let's start with just the return on investment. What's the return on investment on this particular duplex that you bought?
The total return is 26% per year.
26% annualized.
Correct.
Wow.
Yeah.
Jeffrey?
That's really good.
That's not bad, right?
You can't get that in the market.
Of course. And so 26%, and there's different ways that we're making this 26%, but let's go through it. So teach me how we can make 26%, and I know that you like to use very conservative numbers, and I think that's just a great way to live life. So you purchased this property an hour and a half west of the GTA.
Yes.
And what was the purchase price?
I bought it for $290,000.
$290,000.
Which was actually above list. It was actually listed at $269,000.
Okay.
But the market, sometimes, they price things strategically, and it was in a hot market, so it was priced to encourage multiple bids, which is what it got.
Correct. Yeah.
That's interesting. I mean, there's people out there that think, how can an investor get involved in a bidding war? You're telling me you're making 26% annualized, and you overpaid in terms of the listing.
In terms of the listing.
In terms of the listing, market value would probably demand it being exactly what you paid for, but you're saying in terms of the listing.
That's it. List price is really, it's kind of irrelevant. And I know we've seen that in lots of different markets. Stuff is going for 30, 40, 50, 70 above list. It just depends what's happening in the market. That's not always the case.
Yeah.
And that wasn't happening when I first started investing, a couple of years before that.
Yeah.
But in this case it was, and I knew my numbers. Like I ran the numbers, when I got wind of this property, I ran the numbers and I knew what my top price was.
Yeah.
And I actually went in at $285, and then literally about an hour or 45 minutes before the offer was being presented, because they were holding offers, I phoned my realtor and I said, nope, I go up by $5,000. I knew I wanted it, and I knew it was going to go, and I knew the numbers would still work at $290.
Yeah. You make people like Jeffrey very happy when you say, I knew my numbers.
Exactly.
Because Rav never knows his numbers, and I say, Jeffrey, can you help me with my numbers?
Well,
No, I'm just
I
kidding.
love that you're pre-planning, which is always a good idea.
Yeah.
So,
Yeah, and I think a lot of people get into real estate without, they just kind of go, oh, I think that should work. That's a good area.
Exactly.
But I really like to make sure, that I know it works on conservative basis,
Yeah.
and then if things work out better than that, market goes up more than I'm expecting, then that's just a bonus.
Just gravy. Okay, so we bought for $290. So what was our down payment?
So I put 20% down, which was $58,000.
$58,000, and there's some closing costs.
Yeah. So my land transfer tax, home inspection, legals was $6,325.
I love that. You put it all in there.
All in.
Okay, so $63.25 for that. And then did we put some major reno, a little bit of reno, turnkey? What was this?
This one was mostly bought as a turnkey property. I did put $11,500 into it, but that was literally just painting both sides to freshen it up.
Yeah.
And I had 4 appliances that I had to put in there. So it was just kind of lipstick.
Take care of your tenants, our clients, our customers. Take care of them and make the place look good. So that total number then, with the renovation cost, is what? About $75,000 there?
Yeah, $75,825.
So you're in for $75,000. So Kelly's investment amount is $75,825. So now we're going to make money a few ways.
Yes.
One of the ways we make money is just naturally it appreciates.
Yeah.
And so what percent did you use for this? 3, 4, 5, 6?
I used 3%
Wow,
in this market.
very conservative.
Yeah. The actual, the 10-year historical actual rate is just under 4% in that area. It's 3.8%. So it's a conservative market to begin with.
Okay.
So I went 3, and it's actually growing. It's kind of between 2 commuter towns, so it's...
So that's 3% on the 290.
Correct.
Okay, so that is...
So that's 8,700.
8,700 there. And then, of course, the beauty of this, and it looks like we have 2 of them doing it for us, paying down our mortgage.
Yes.
And so that's principal. What are they paying down on the principal every year?
On the principal, they're paying down $5,195.
So just over $400 a month is going under the mattress. $51.95. Yeah, because it's principal. It's money coming back to you, right?
Yeah.
And then what's the cash flow on this?
Cash flow, so yeah, the income minus all the expenses after everything's covered. Cash flow per year is $5,856.
$5,856. So we're making money through cash flow, somebody paying down our mortgage, and then it just naturally going up in price as real estate does go up and down upwards. And so if we add those numbers together, that's close to 20,000 there.
Yeah, it's 19,751.
19,000.
751.
So we take the 19,751, which is the way that Kelly's making money, the profit, if you will. You divide that by the investment amount, and in this case, the 75,825, and that's what will spit you out a 26% return on investment. It's kind of like you're on your third one now. Let me ask you. I get in trouble a lot because it's kind of boring, you know. Like it's just. It makes money and it's kind of boring. And where I get in trouble is, okay, this is boring. Let me try some stocks, or let me try to invest in that guy's business. And I always lose.
Right.
And then I come back to this boring endeavor that makes me, you know, I mean, there's my accountant right here. he knows that the real estate is the thing that makes me money.
Yeah.
Do you find it the same way? I mean, it's exciting in the sense of like fun, but it's not like, you know, you're feeling like you're going to go skydiving or anything like that.
No, I wouldn't describe it like that for sure. Yeah, there's a bit of work to be done. You know, like there's excitement, if you will, like in negotiating the deal, you know, when you're trying to figure out what price to go in and putting the deal together. And then, you know, getting the right tenants and just kind of getting it all running.
Yeah.
But you're right, after that, you want it to get boring, ideally, right?
Absolutely.
I agree.
Because you want to enjoy time with your son or with.
Yeah, exactly.
Jeffrey, this was 8 months ago.
Yes.
She's packaged this all together beautifully.
Yep.
If another investor came along and said, I like this, I want to buy this from you, how would she be taxed because she did this within 8 months?
Taxation really depends on the intent. I mean, in Kelly's case, she intended to buy it and rent it out and hold.
And hold it.
Exactly. And so basically the fact that she's renting it out, even if it's for a year or 2 years, it becomes capital gains treatment.
That would be capital gains. If she sold it in a year or 2 years, CRA
matter.
will say this is capital gain.
Correct.
And she bought it for $290, and let's say it's $390. So she would be taxed 25% on the $100,000.
Correct.
Right?
Yep.
Or taxed, you know, on half.
Exactly.
Half it, which might
capital
be
gains is half taxable.
And do you do this in Kelly's name? Do we do this in a corporation? How do you do it?
I have a mix. So my properties are some in personal name, some and in different corporations. Like the flips that I do are in a different one than long-term buy and holds.
Okay. You do your numbers.
Yeah.
You know your stuff.
It is. I mean, and each person's situation is different. So, you know, it really is hard to say what's the right way.
Yeah.
Right.
Yeah. And I know that just everyone's situation is different.
Correct.
So that's, you know, something that just I didn't structure it that way right away. I was advised not to, but as things change, you should always keep in touch with your professionals to make sure that what you're doing is still relevant to your situation.
Kelly, thank you so much for being on the show. I really appreciate it. Always inspired when I get to talk to you. Jeffrey, thank you for being a friend and taking care of Sinead and I, my family's portfolio. Thank you, the viewers at home, for watching the show. Without you, we wouldn't have one. If you want more information, go to theeverydayinvestor.info. We'll see you next week, same time, same place. Honey, I love you. I'll be home soon. Thanks for watching, everyone.